let's make our RRSP contribution. If you're a first-time home buyer, let's make our FHSA contribution. All this will help you in terms of reducing your taxable income and ultimately generate a positive tax refund. Welcome to another edition of the TF Team podcast. I had so many individuals during the holidays and talk to me about, you know what, Pierre, this year is going to be different. How could I make 2026 a bit different from my finances for 2025? So what did I tell them? Start 2026 strong. Let's look at how we could set your finances up before tax season. I mean, right now between, January 1st and March 1st, I believe is the RRSP deadline. So right now people are focusing on tax and their finances. They got the bill. They've got they've got their credit card bills from the holidays, and now they're saying, oh my goodness, how am I going to pay that? So by starting strong, strong years don't happen by accident. They're planned. So you've heard me I'm going to talk semester. I'm still the professor. You heard me last year talk about planning. If you fail to plan, then you plan to fail. So we've got to start strong. We've got to plan. Taxes, I know it's a four-letter word for everyone, but they're not the enemy. Lack of preparation is, right? Taxes to actually kind of do good things. The roads, the hospital, the schools that we get, taxes help to pay for that. So taxes is not the enemy, but let's use our tax system to our advantage, not to the government's advantage. So tax season actually rewards preparation, not panic. Don't panic. Let's stay focused. Let's know our numbers. Let's know how much money is coming in, how much money is going out, how much debt that we have. So if we have a lot of debt, especially credit cards debt, let's not focus on saving. Let's focus on paying down the debt. There's two methods that you could do, the Avalanche method or the snowball method, whereby we attack the high interest debt first. Once we finish this one, we move on to the other one, and that will increase the cash flow. And by increasing your cash flow, lowering the interest cost, we'll have more money to save towards our goals. So being intentional, being focused to take one of those two methods before tax season, before April occurs, and then we're trying to catch up. Let's start right now. Let's use various tools properly, and let's not leave, taxes or opportunities or benefits on the table. If you're managing your money well, if you're managing your debt well, then we would have some extra money available, and then let's make our RRSP contribution. If you're a first-time home buyer, let's make our FHSA contribution. All this will help you in terms of reducing your taxable income and ultimately generate a positive tax refund. So let's not wait long. Let's focus now. Let's not procrastinate. We don't need complex strategies. All we need to do is start right now. So go take a look at money coming in versus money going out. If there's more money going out than coming in, let's make some adjustments to start paying down the debt. Let's look at what's important to us in terms of expenses, and let's not focus on stuff that we don't really need. So let's see in terms of cutting down expenses. So common mistakes that we may make: one is procrastinate, waiting until March, April, until spring about doing things to our taxes when we could have done it in the first 3 months. reacting as opposed to being proactive, only reacting after you're getting your refund or a bill. We should know what's coming in already. We should know what the bill entails, right? So let's focus on that. So if we know we're going to have a big bill, then let's tighten our budget and let's focus in terms of paying down that bill. Not using, another mistake is not using registered products. I've talked about it, RRSPs, TFSAs, FHSA. Not everyone should have an RRSP, but I strongly believe everyone should have a TFSA. If there's almost one thing that I almost say is guarantee 100%, is everyone should have a TFSA because of the first two letters of TFSA, tax-free. Missing the deadlines. Don't miss the RRSP deadline. The TFSA deadline is actually December 31st. It's not the same as the RRSP deadline. The FHSA deadline is also the same as the TFSA deadline. So don't miss those particular deadlines. All this to say there's a lot that we kind of covered in this small podcast. We will be having a webinar the second week, I believe, of February. If my producer to my right is nodding, so I think I'm right. So we'll be hosting a live webinar about tax tips that you could use to help generate a tax refund. And hopefully that tax refund, what could we do? Pay down debt. And if our debt has been paid down, then let's use that tax refund to save and invest. So we'll be able to break this down for you in the webinar in a simple and practical way. Hopefully we won't overwhelm you with a whole lot of jargon. So what did we learn in our particular session today? Start 2026 strong. Start today. I should have started yesterday, but start today in terms of figuring out money coming in versus money going out. And if there's more money coming in than going out, then let's focus. There's more money going out than coming in. Let's focus on reducing our expenses by either taking the Avalanche method or the snowball method. Let's start paying off our high interest rate debts first. By doing that, we'll generate some extra cash flow, we'll create a surplus, and we could apply that surplus towards our goal. So in closing, a strong 2026 isn't built in April, May, or June. It's built in January. So the earlier you prepare, the more control you would have. We want you to be in control of your destiny. Hope that you've enjoyed this podcast. Please like and subscribe, and we'll see you again in episodes to come, and hopefully you'll be able to join our tax webinar in February. Look for that in weeks to come. Bye for now.